from Bloomberg's world headquarters in Midtown Manhattan, I'm Matt Miller.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, an exclusive interview with the outspoken CEO of one of the world's biggest crypto exchanges. We'll ask Kraken's Jesse Powell about strategy, sanctions, regulation, and more.
And Wall Street's making major moves in crypto, but retail investors appear to be anchored to the sidelines. We'll survey the investing landscape with LaVecchia of Oasis Pro Markets.
Plus, crypto custody firm BitGo drew an all-cash offer, which exceeds the value of that now terminated deal with Mike Novogratz's Galaxy Digital. We'll have all the details.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP-GO. That is your function, but I have a snapshot of just a few here on the board. We can see it is a down day for the major coins. Bitcoin and Ether each down a little more than 1%. Bitcoin is trading south of that $24,000 level, while Ether is trading south of $1,900. Remember, it earlier approached $2,000 earlier this week. There's optimism building about the merge next month. However, that is a fading story today. One more positive story out there, though, is the dog coins. Dogecoin in particular, up 9.3% on the day, speaks to some of that speculative behavior back in the market in certain areas. And finally, just noting Coinbase, it of course trades pretty much in tandem with the price of Bitcoin, so it is lower by about 1% today, Matt.
And of course, it's been a rough couple of weeks for Coinbase and also for rivals like exchange Kraken. In July, the New York Times reported that Kraken is being investigated by the Treasury Department over whether it allowed users in Iran to trade on the platform. The Times says the Office of Foreign Assets Control has been looking into Kraken since 2019 and is expected to impose a fine. But Kraken isn't alone. Back in 2020, OFAC fined BitGo more than $98,000 for 183 apparent sanctions violations or alleged sanctions violations. Last year, it fined BitPay more than $500,000 for 2,100 alleged violations. Joining us now for an exclusive interview is Kraken CEO Jesse Powell. And Jesse, I don't think this has been confirmed outside of New York Times reporting. Can you tell us whether or not you are under investigation by the Treasury Department?
As far as I know, the New York Times has not confirmed it either. They keep asking us for confirmation, so they're reporting rumors at this point. And we don't generally comment on investigations or discussions that we're having with regulators. However, I can say that we regularly report things to regulators that we discover ourselves. And this is, I guess, the speculation that something happened back in 2019, 3 years ago, and we've been having discussions ever since. We have ongoing discussions with regulators all over the world all the time. Sometimes we report things to proactively, and this wouldn't be a surprise to me. And I'd love to see these numbers for the banks, by the way.
Well, but on the specific issue of Iran sanctions, have you been contacted by Treasury or any other federal agencies about the possibility of sanctions violations?
Again, can't speak to that specifically, but we are in regular discussions with Treasury.
Fair enough. Okay, let's talk about sanctions of another kind. In regard to the sanctions on Tornado Cash, how has that impacted Kraken in your business?
Hasn't really, as far as we can tell. I think that what they've done might be unconstitutional. It sounds like Coin Center may be gearing up for a challenge on those grounds. I think that people have a right to financial privacy, and there are a lot of legitimate people using this service for legitimate financial privacy reasons. And I think that we'll see if this survives a challenge.
We've heard a lot of exchanges have had to freeze access to Tornado, and it's happened before with other mixers. Do you have to set in place certain procedures when this kind of thing happens?
Right. So we would prohibit withdrawals to any addresses associated with Tornado, and we would likely freeze any funds coming in from a Tornado address.
Jesse, this all goes to kind of the censorship of money, which when I first started getting into Bitcoin back in 2010, the idea was that we would be allowed to go around governments that were censoring their fiat currencies. How do you deal with this as a proponent of free speech, as a proponent of free movement of money, as a Bitcoin proponent, and still work within the regulatory framework of like the U.S. government?
Yeah, it's a tough challenge. This is why we have these conversations going on all the time. We're really trying to educate regulators and law enforcement and the lawmakers about the real risks here and about the real need for financial privacy and who cryptocurrency really serves. And beyond the speculative use case here in the United States, it's really helping people all over the world who have less access to financial services. There are billions of people in the world that don't have access to a bank account. So crypto is really for those people first and foremost. And the getting around government controls around the monetary system, is a sort of secondary benefit that you see come into play in cases like Canada, where they've shut down the bank accounts of protesters. That's the kind of scary thing we hope we don't see here in the United States. But that's another kind of insurance policy that cryptocurrency and Bitcoin specifically provides. I think we'll see a constitutional challenge against Tornado Cash, and I hope that people get their right to publish code and that code turns out to be speech and money turns out to be speech, and everyone has a right to spend their money however they want.
So do you think the sanctions on Tornado Cash are more emblematic of just an attack on open source development as a whole?
I don't think so. That the code repositories were taken down, is I think a step that was not necessary. But I don't see a widespread attack on open source code. Open source has been around for a long time. People sharing code and writing code together in public view for a long time. There are a lot of benefits to open source code, the transparency. People can evaluate for themselves what's really happening. I think this is mostly like a knee-jerk reaction, a hasty response to what happened with UST and Luna recently. So I think regulators are kind of overreacting, looking to protect people.
Right, they are looking to protect people. If there's anything that the last couple of months have spotlighted, Jesse, is that there is a lot of risk in these assets and not necessarily many of the protections in place for traditional financial assets. As we like to say, there is no FDIC for crypto. As we think about the liquidity crisis that has faced so many different players in the crypto industry as a whole, how are you feeling about your position? I know you just finished up your audit for 2022.
Right. Yeah, we just finished up our second audit of the year with the help of Armanino. So this is a full proof of reserves, which is cryptographically done, which allows the users to actually verify for themselves that their balance was included in the pool of funds that we had audited. So we hope to keep expanding that to even more assets. We had 7 assets covered this time. We'll keep working our way down the list. This is a level of transparency that's not offered in even the banking system. So, I think it's a step up for crypto and setting a great example for the world and, giving regulators something to feel comfortable about. In terms of the liquidity in the market, I think that the retail investors have maybe pulled back a bit from where they were 6 months ago. I think a lot of great reasons why. I think the macro environment is really tough right now. Inflation seems to be, out of control. We're by all measurements in a recession here in the United States. So that's to be expected. Obviously, when people have more discretionary income, they're making more investments. I think right now they've been worried about the price of gas and the price of the living expenses.
When you look at some of the stable coins, which are some of the most widely traded crypto assets in the world, are you concerned about the transparency there? I know that regulators want to see more in terms of what Tether or Circle have backing up these one-to-one dollar currency claims.
Yeah, I think it'd be great to get more transparency there. I think Circle's heavily audited. So, USDC, I think, is heavily supervised. Tether may be less so. However, I think, as you just saw, USDC froze a bunch of funds that were out there that were linked to Tornado Cash. And there have been some reports that people were kind of mistakenly frozen there. So, having a digital currency that's so tightly controlled and able to be influenced by maybe a hasty and maybe an unconstitutional government action is a little bit scary too. So, I think that while we're talking about CBDCs and these stable coins, people have to think that there's also this risk that, these things can be controlled by the government and frozen without, any recourse.
Overall, regulation has been a headache. In some ways, obviously helpful, but also the fact that it's just not defined enough yet has been a real headache for investors and exchange operators. How much longer do you think we have, Jesse, on this rocky road before everything's ironed out in terms of, Coinbase is trying to decide whether, or the regulators are trying to decide whether Coinbase is trading tokens or securities? That should be something that's pretty easy to tell.
You would think so. And we're about 13 years on with Bitcoin now. We still don't have answers from the government on this. I think it's largely a legislative failure. I think the regulators are going to read the law to increase their scope as much as possible. And as we've seen, with the SEC, they really take the view that basically everything is a security, and they would like to regulate everything and be the regulator of all crypto companies. However, I think Coinbase has said that they don't list securities. Kraken also does not list securities. So that means there's a disconnect somewhere between our evaluation of what these assets are and the SEC's evaluation.
Yeah.
And I think we need the legislature to clean that up.
Okay, so that's evaluation. Let's talk about your valuation, because we have seen the valuations of public companies in the crypto sphere obviously very impacted by the crypto winter. I'm wondering if yours has been affected and what that may mean for any future raises you may be looking at.
Yeah, it's hard to know with the private markets. Obviously we're not tracking the price on a minute-by-minute basis like the public markets are. So it's really hard to know. We haven't been out raising capital. We've got a very long runway of cash in the bank. We're profitable, so we don't need to go do another financing anytime soon. I think we'll probably wait for the market to improve before we go do another round.
Okay, fair enough. And finally, on the subject of market improvement, I just want to get your take on the price we have seen in these crypto assets, because you were talking back in 2021 about where you thought Bitcoin would end that year and this year. Just take a listen to what you said.
Probably by the end of the year, I think it'll be 1 Bitcoin per Lambo, and probably by the end of next year, it'll be 1 Bitcoin per Bugatti.
So, Jesse, at the end of 2021, it was trading more around $46,000. Today, it's trading south of $24,000, which maybe could buy you a Honda Civic. What's your outlook now?
Yeah, I wasn't expecting all of this craziness in the macro environment. However, I'm still hopeful that I'll be able to buy a Bugatti by the end of this year for 1 Bitcoin, but I wouldn't hold my hopes out. Would you even want to pay for the gas for such a car at this point? So, I'm still very bullish. I bought in Bitcoin again at 18,000. So I'm happy to ride it all the way back up. I'm still very bullish in the long run. The fundamentals keep improving. So I would never bet against Bitcoin.
Jesse, thanks so much for joining us. Jesse Powell, the CEO of Kraken, talking to us about his business and the business of crypto. 1 Bugatti, by the way, has 16 cylinders and 4 turbochargers.
Things only Matt Miller knows.
The gas would be expensive indeed. Coming up, Pat LaVecchia, CEO of U.S. digital securities trading platform Oasis Pro Markets.
And Novogratz' takeover target is now seeking a $100 million termination fee. More details ahead.
To access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Institutional interest in digital asset is far from waning, despite what we're seeing in the markets.
It speaks to institutional customers, very traditional institutional customers wanting to get crypto asset exposure.
It's a validation to the industry, to blockchain and digital assets.
It should be fascinating to watch how Bitcoin volumes start to gradually move higher over the next year or so before they maybe all of a sudden jump as more institutions do begin to pour into the space because of that integration ease.
Different market participants welcoming institutional interests in digital assets. Let's talk more about that now. Pat LaVecchia, CEO of Oasis Pro Markets, a U.S. digital securities trading platform, is joining us right here on set in our New York studio. Pat, great to see you. There seems to be a sense now about institutional buy-in, being resilient even in the face of a crypto winter. It seems, though, that retail is staying on the sidelines, a bit more hesitant to a certain extent. And I'm wondering what you're seeing in activity and especially those institutional flows, if you think they're sticky.
Great question. Pleasure to be here. Thank you. Retail is down about 50% in terms of volume over the last month or so. So the soft retail is gone. On the institutional front, volumes are down about 40% in terms of crypto, right? Bitcoin and ETH and that trading in the alts. What we're seeing is on the high frequency trading side, that volume is picked up. And the guess is, it's more than a guess, but the view is that what's occurring is latency arbitrage. Basically, mispricings between exchanges. So the high frequency traders are picking their spots, and that's a big part of the volume that you're seeing out there.
You say it's more than a guess, because obviously you've got a ton of data from Oasis Pro to back it up. Tell us about your, what do you call it, alternative trading system,
Sure.
and how your regulated alternative trading system is different from others.
Yeah, absolutely. So Oasis Pro Inc., our holding company, is a fintech and blockchain company. Oasis Pro Markets is the digital investment bank of the future with an ATS. An ATS is an alternative trading system. ICE started as an ATS, as an example. What
and
makes
now owns the NYSE.
Exactly, and that's where
iconic trading system in the world. Yeah?
So it started. So we're an ATS, digital blockchain, using the evolution of technology to the blockchain, which is really exciting. We can talk about that if you'd like. But what we can do is, and what differentiates us is digital cash for digital securities trading. So what's called an atomic swap. When you're trading crypto today, what's occurring is you're trading crypto for crypto, digital wallet to digital wallet, and it happens almost instantaneously. We can do that on our ATS with stablecoins like USDC and DAI, for example. CBDCs, we're actually registered for CBDCs when and if they come, as well as certain cryptos such as Bitcoin and ETH. You could take your holdings in a digital wallet and actually buy digital securities. The benefits of blockchain are
instantly no T3 or T2 for you.
I'd like to say T0, but there's a company out there with that name. So T seconds or milliseconds, absolutely. And in 10 years, we're going to look back, and this is going to be ubiquitous in the markets. The institutions are in this market right now, and they're building for it. Some of the benefits of blockchain versus, the current systems, which are built on servers from really 1973, is no counterparty risk. So remember AMC and the halting and trading of DTCC, because it's instantaneous settlement, lower costs, an immutable record, so which should benefit the regulators.
Well, on the subject of regulation, something we were just speaking with Jesse Powell of Kraken about, and stablecoins in particular, there has been a lot of scrutiny and yet no real action. Do you have to see the action in order to have real conviction in these markets and in these assets?
Great question. Crypto's I've been in crypto for about 5 years. I was a skeptic for the first year. I'm a big believer. Bitcoin, ETH, stablecoins, I believe, are the future. They're not going away. This tornado cash issue that's come up is a real issue. It's a blender, for those who don't understand. So really, it makes wallets anonymous, and could lead to nefarious parties utilizing it.
Or just to privacy.
Privacy, yes. Right. That's a whole,
it could lead to just you living your own life.
Absolutely. And I do know you've been in crypto for about over 10 years. So that's how it started. But we're regulatory compliance forward. So that's always our approach. And in regards to the regulatory framework, there were analogies in your previous segment regarding cars. But the way I view it is that the current regulatory environment, not only for cryptos, but really for digital securities, and what's occurred with Coinbase naming 9, the SEC naming 9 tokens as securities, is right now we're a Ferrari with training wheels. And the training wheels are tied to the regulators. And eventually those training wheels will be taken off and everybody will benefit. The market democratization, fractionalization, TradFi firms are moving into this space in terms of the benefits of DeFi, but it's going to take time. We're very early.
All right, we have to leave it there, but thank you so much for joining us here in our New York studio, Pat LaVecchia, CEO of Oasis Pro Markets. And be sure to check out our Bloomberg Crypto podcast as well. It dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Matt Miller with Kailey, Leinz. Let's get to some of the crypto stories that caught our eye this week. Around $1.9 billion worth of digital tokens have been stolen in hacks this year. That's up 58% from the same period last year, according to a report from Chain Analysis. DeFi protocols have emerged as one of crypto's weakest links after targeting from state-sponsored hacking groups from North Korea.
Do Kwon, co-inventor of the failed Terra stablecoin system, says South Korean authorities have not been in touch with him. Prosecutors opened a probe into allegations of illegal activity behind Terra's collapse and last week raided the home of co-founder Daniel Shin. Kwon said he plans to cooperate when the time comes.
And crypto custody firm BitGo is seeking a $100 million termination fee from Mike Novogratz's Galaxy Digital. Galaxy says it is ending the $1.2 billion acquisition deal after BitGo failed to deliver financial statements. BitGo says it has since attracted an all-cash offer that exceeds Galaxy's deal, but may instead opt for an IPO. And oh, by the way, it says they did deliver those audited financial statements from 2021.
Yeah, definitely quite the dispute. And I love how this show came full circle, because at the beginning we were talking about BitGo and a fine it had received due to sanctions violations. Now we're all going to wait and see if Jesse Powell eventually talks about whether or not Treasury's investigating them on those Iran sanctions and what kind of fine could come with that.
Yeah, that's right. It doesn't seem like it would be a huge fine. BitGo only got fined $98,000 and BitPay was only fined $500,000 for more alleged sanctions violations than Kraken probably has. But it'll still be interesting. I think this fight with Galaxy Digital is going to be incredibly interesting to watch, because Galaxy had a huge loss in the second quarter.
More than half a billion dollars.
More than $500 million, and maybe that's why they've pulled out of the acquisition, although they say it's because they haven't got those statements, and BitGo says they delivered them.
Yeah, well, we'll have to see how Mike Novogratz handles this one going forward. I have a feeling that it's not going to be wrapped up nice and neatly in a bow with them pursuing that termination fee. That's going to wrap it up for Bloomberg Crypto this week. But coming up on next week's show, we're going to focus on Bitcoin mining. We'll be talking with Iris Energy board member Mike Alfred and Chamber of Digital Commerce founder and president Perry Ann Boring. We'll be back same time, same place next week, Tuesdays, 1 p.m. Eastern Time, right here on Bloomberg.